So in this video we are going to be dealing with the purchases system as the next transaction, the purchases system. So we shall look at the key activities, the key transactions, and then the key documents at first. But this light is over affecting the board, so I don't know if I should switch it off. Let me first give you how it will look like in case I switch it off. So you tell me whether you prefer it on or off. So is this okay? Is this okay? So I'm dealing with the purchases system. We are going to look at the key activities, key transactions, and then the key documents. So this is what we have. These are the key transactions, common documents, and then the key activities. So this is how it looks like without the light. Let me put it on. You let me know what you prefer, then it's what I'll go with. But for now, let's first use it as I wait for your feedback. So key transactions in the purchases system. The first one is purchases. Purchases is all about buying goods, but when those goods are for sale, you buy them to sell them. That's purchases. So there is purchasing. You purchase goods so that you can be able to sell them. Then we have payments. Like, you don't get those goods for free. When you purchase, you're supposed to pay. So there is payments. Then there is purchases returns. In case you purchase something that you do not like or something that doesn't match your standards, you return it back. That's purchases returns. Then the key activities, we have requisitioning goods. Requisitioning is something like requesting. Maybe like the finance department wants something, they have to request the procurement department. The procurement department, so that the procurement department can be able to purchase those goods. So we have requisitioning goods. It's like requesting by the person or by the department that wants to use those goods. Then purchasing the goods. After requisitioning, the goods will be purchased. Then receiving the goods. Invoice processing, like now here the invoice is going to come from the supplier to the entity. Then recording supplier invoices. Then processing and recording goods returned. Those are some of the key activities. Then the key documents, we have the purchase requisition, the one that is used to request for goods from the procurement department by the intended user. The intended user are the other departments, maybe finance department, accounts department, production, stuff like that. So purchase requisitions, then the purchase order. Now here the purchase order is sent to the supplier to order for the goods that the organization wants. Then we have the goods received notes. These show that you've received the goods that you ordered for. Then the purchase invoices, it is a request for payment of the goods you received. Then the purchases journal, it records the purchases. Then the accounts payables ledger, it records the creditors. The accounts payables ledger records the creditors, or the people that are demanding the business in case goods were purchased on credit. Then the general ledger, it records everything. Then the debit notes. Now these ones come in when goods are returned. When goods are returned to the supplier will have to pay back. Will have to pay back the entity their money since they returned the goods. But before that, the debit note has to be sent. Then we have the accounts payables list that show the people that are demanding the business, or that show the creditors. Then the goods return notes that show that goods have been returned. So those are the key documents that we are going to be using in the purchases system. Those are the key transactions. These are the key activities. Yes, so now let's look at the assertions. Yeah, one by one, and as usual we are going to start with occurrence. So this is the format that we are going to use. The assertion, and then its objective, then the key controls, and then the test of controls. Yeah, we are going to start with occurrence. So the first assertion we are dealing with is occurrence, or occurrence and existence of payables. So remember, in the purchases system we have the cash purchases and then the credit purchases. So like cash purchases, we test for occurrence to see if they really occurred. Then existence of payables to see if those creditors really exist. So here for occurrence, you're making sure that something real took place. So the objective is to ensure that the purchases recorded are only for goods that were received. And then to make sure that those purchases were properly authorized and they are from the best suppliers. That's the objective for currency. To make sure that the purchases recorded are only for goods that were received, then they were properly authorized and they are from the best suppliers. So what are the controls that management can come up with to achieve this objective? So the controls that we have, the first one is segregation of duties. So what you should know, anywhere, like if you see an occurrence session, one of the controls that can be used is segregation of duties. It is a common answer, it's going to be in every transaction. So segregation of duties is the first control in occurrence. So here in the purchases system, the management has to separate the duties and they make sure that the person that authorizes purchases is different from the person that receives the goods, and then is different from the person that makes the payments. So there will be segregation of duties. So the next assertion, the next control is goods received are counted, inspected, and then compared to POs, which is purchase orders. Goods received are counted and compared to purchase orders. Let me first. Can you see there? Goods received are counted, inspected, and compared to purchase orders before goods received notes are prepared and the original are sent. So here, management has to make sure that the goods that they receive are counted and then inspected, then they compare them to purchase orders to make sure that they match. You have to see that there is no difference before they prepare the goods received notes. So this will help them to achieve this objective, to ensure that the purchases that are recorded are only those that were received. Yes, so there are very many controls. Yeah, though I can't give all of them, but let's go with these two. I can't give all of them because when a question comes, it doesn't, like, you're not supposed to cram these things. You're supposed to understand how to interpret a question and all that, because you may not even use these exact controls. Yeah, the controls that you write depend on the question, like the way the question was given. Yes, so these are the key controls: segregation of duties, and then counting, inspecting, and then comparing with the purchase order. So the test of controls, like how can these two be tested? So as I told you, the test of controls depends on the controls that we're given. So here, segregation of duties, we said the test of control for this, the auditor is just supposed to observe and see if there is proper segregation of duties, to see if the person that approves the purchases is different from the person that receives the goods, and is different from the person that makes the payments. So that's the test of control for here. Then for this one, the auditor is supposed to observe the receiving of goods, because the contract says goods received are counted and inspected. So the auditor is supposed to observe the receiving of goods to make sure that they are counted and then inspected properly. Then we said and compared to purchase orders, and before goods received notes are made. So here the auditor is supposed to select a sample of a goods received note to then compare that goods received note to a purchase order to see if it has a corresponding approved purchase order, yeah, and to see if things match. So that will be the test of control for here. So even though I don't write it, and you just twist the control, you come up with a test of control. Here the auditor is supposed to observe to see if there is proper segregation of duties, whether the person that receives goods is different from the person that approves and the person that makes payments. Then for this one, the auditor is supposed to observe the receiving of goods to see if there is proper counting and then proper inspection, and then compare, like select a sample of a goods received note to see if there is a corresponding purchase order. So that is the occurrence assertion. Then we are going to the completeness assertion. So the next assertion is completeness. Completeness is complete, it's something that is like a whole with nothing missing. So here the objective of this assertion is to ensure that all purchases for the period are recorded without missing anything. Yes, so that is completeness. So how can management achieve this objective? How can management make sure that all purchases for the period are recorded? So that's when we come up with the controls to achieve this objective. So one of the controls that can be put in place to achieve this objective of completeness is goods received notes are reconciled with purchase invoices and then purchase orders. Like, in order for you to make sure that all purchases for the period are recorded. You compare the goods received notes and then the purchase orders to see if everything is matching. Yeah, if they're matching, it means that things are complete. If they're not, then you investigate the difference. Then the test of control, you base on this. So we say goods received notes are reconciled with purchase invoices and then purchase orders. So the test of control is select a sample of goods received notes and check if they are matched with purchase invoices and then purchase orders. So you just use this sentence to come up with the test of controls. Select a sample of goods received notes and check if they are matched with the purchase invoices and then purchase orders. So that's how we can achieve this objective. Yeah. Or how we can ensure that all purchases for the period are recorded. Yeah, there are very many controls. I can't give you all of them, but as I said, the controls depend on the question. You can actually write a control that you've never seen as long as it makes sense to you. Yeah, a control is like a suggestion of what management can do to overcome a particular situation or to achieve a particular objective. So we are going to look at the next assertion, which is accuracy. So another assertion we have is accuracy. As we said, something accurate, it's something that is correct. So here the objective is to ensure that purchases are recorded correctly in the accounting books. That's the objective for accuracy. Like these objectives are the same in the sales system, in the purchases, payroll, they are just the same. You just keep changing these purchases to ensure that sales are recorded correctly in the accounting period. If they ask you for the objective of the accuracy assertion, you say to ensure. They can ask what's the objective of the accuracy assertion in the sales system. To ensure sales are recorded correctly in the accounting records. Then if they ask in the purchases system, you just keep changing this. But the objectives are just the same. You just remove this word and put the system that they have asked for. Yeah, so the control here, like how can management ensure that purchases are recorded correctly in the accounting period. So we come up with the controls. So these are some of the controls that can be used to ensure that purchases are recorded correctly in the accounting records. So the first one is purchase invoices are matched with goods received notes and then purchase orders. Like you match the purchase invoices with the goods received notes and then purchase orders to see if they match. Yeah, if they are matching, then everything is correct. If they're not, then you investigate. Then the debit notes are also matched with the goods return notes, like the amount of goods that was returned and then the amount of money that is in the debit notes to see if they match. Yeah, so if they're matching, then it means that everything is accurate. If they're not, then there is a problem. Then another control is check for arithmetical accuracy of the supplier invoices by the payables ledger section. Like the payables ledger section should check whether the supplier invoices are correct, whether the figures are correct. Yeah. And this can be by them calculating for those things to see if they are really correct. So the test of controls, we get the test of controls from the controls. So the first one is purchase invoices are matched with goods received notes and purchase orders. Then debit notes are matched with goods return notes. So here, what will the auditor do to test if this is working in the organization? So the auditor will select a sample of this. Select a sample of purchase invoices and then check if they are supporting goods received notes and purchase orders. And then select a sample of debit notes and see if they are supporting goods return notes. Or select a sample of goods return notes to see if they are supporting debit notes. Yes, so those are the test of controls. You just get them from here, even though I don't write them. Hope you've understood. In case you haven't understood, please comment down below so that I can be able to change in the next video. So the auditor is just supposed to select a sample of the purchases invoices and see if there are matching goods received notes and then purchase orders. Like that. You just twist the control and make it a test of control. So that is the accuracy assertion. So the next assertion is a cutoff.